Hey everyone, Couch Investor back to another Palantir video for today. So now that we had time to digest the earnings report, now that we had a full day of trading, so that you could see the reaction of Wall Street, you could see the reaction of the analysts as well. Let's have a quick recap of what exactly has happened, why the stock reacted the way it did during the day, why some analysts are a bit disappointed, and unfortunately, if you look at the graph, there is probably more bad news coming as well. Again, this is just for technical analysis people. Long-term investors should embrace a better buying opportunity, and I think that the company itself will embrace a better buying opportunity as well if they do decide to use the $1 billion that was authorized to buy back shares. Because believe it or not, it is possible that they won't touch that $1 billion. If the stock never drops to a reasonable price, they might just not use that amount of money, right? They're not obligated to buy any shares. So whenever you see all those headlines, oh, these buybacks make no sense, why are they buying back at a super high price? Why didn't they buy back at $6, $7, $8? They had the time, etc., etc. You can tell them they're not buying anything right now. They are authorized to buy shares. Whenever that will be, we don't know. We'll have to wait another 3 months to see if they actually bought during Q3. Now, with regards to the current state of the company and the growth projections for fiscal year 24 and 25, this is what we're looking at today. So if you want to look at the PE ratio for the next 12 months, that sits at 70 times. So yeah, a bit ridiculous there. But if you look at sales growth, I'm going to skip fiscal year 2023. Let's look at fiscal year 2024. Sales growth, 18.59%, EPS of 26 cents, that's a 14.26% growth. If you look at fiscal year 2025, that's $3.17 billion in sales and year-over-year growth of just under 21%, which is exactly what I want to see again from Palantir, especially at current valuations. Growth rates aren't great, right? We were promised 20-25% growth. That's not the case. It has not been the case for a while. So I'm quite excited to see that analysts do see a major reacceleration in the next 2 years. If you look at EPS there, for fiscal year 2025, 33 cents, so a growth of 28.88%. Now still, if you look at the sales for fiscal year 2025, $3.17 billion, you look at the price, the market cap today, that is still not very cheap. That's around 11 to 12 times sales. Not on the cheapest side, but if we can continue to grow above 20%, things become much better, of course. Now, for those that did not watch yesterday's video, a quick recap of what has happened. So US commercial was $103 million, that's down 3.7% quarter over quarter, but up 20% year over year. US government, $226 million, down 1.7% quarter over quarter and 10% year over year. Government revenue, $302 million, that's up 4.5% quarter over quarter and up 15% year over year. Commercial revenue, $232 million, down 1.7% quarter over quarter, but up 10% year over year. And as for revenue, that's just up 1.5% quarter over quarter, reaching $533 million, just above their own guidance and mostly in line with analyst expectations. And it's up 13% year over year. So again, not crazy growth. But we did have some exciting news from Alex Karp when he talked about the AI platform. So the platform already has users across more than 100 organizations, including some of the largest enterprises in the world from healthcare, finance, automotive, and energy sector. By the way, we've got some new numbers with regards to some of those sectors. That will be for in a couple of seconds. Then, as a result, the demand for AIP is unlike anything they've seen in the past 20 years. We are currently in discussion with more than 300 additional enterprises to deploy AIP within their organization, all of which are searching for an effective and secure means of adapting the latest large language models for use on their internal system and proprietary data. Let me repeat it. We are currently in discussion with more than 300 additional enterprises to deploy AIP. So that's probably where the accelerated growth will come from. Now, there is also an issue here, the pricing strategy. How do they model for that? Because we don't know, right? We don't know what's the pricing strategy of Palantir. They themselves said it, right? We'll just go and see what happens. Now, in their latest 10Q, they do say this, and I don't think this is the first time this is written there, but I want to read that. So their pricing structure for the platform and services change from time to time, which could adversely impact our business, financial condition, and results of operation. So we have in the past changed, and we expect that in the future we may change our pricing models, including as a result of competition, global economic conditions, general reduction in our customer spending levels, pricing studies, or changes in how our platforms are broadly consumed. Similarly, as we introduce new platforms, products, and services such as AIP, or as a result of the evolution of our existing platforms, products, and services, we may have difficulty determining the appropriate price structure for our products and services, or customers may request or demand different pricing structures. In addition, as new and existing competitors introduce new products or services that compete with ours, or revise their pricing structures, we may be unable to attract new customers at the same price or based on the same pricing model as we have used historically. So now put yourself in the shoes of an analyst. You see this, you see the results, you see the positive talks, you're like, so how should I model this? What's going on here? What's going to be the growth? Are we going to accelerated growth, 20 plus, 30 plus? What's happening there? It's pretty difficult for analysts to model these types of companies, especially with the comments, the conflicting comments that we are getting from management. But I just wanted to put this out there so it's clear. Now, another thing I want to mention, it is something I wrote on Twitter already. I think we talked about this yesterday as well. I'm not 100% sure. And that's with regards to net income. Yes, it is positive. But as I explained on Twitter, if you look at the statements here, right? You can see that income from operations, $10 million, fine. That's positive, that's great. Now, if you look at net income, purely net income, that's $27.8 million. But $30 million of that comes from interest income. Now, of course, that's okay, right? It's part of the whole business. It's part of the whole balance sheet shtick for Wall Street. That's fine. But I just wanted to put this out there that without the interest income, because they won't be able to rely on this segment forever, right? It works now in the macroeconomic environment that we're in. This works, and they're taking advantage from it, from a healthy balance sheet. Kudos to them to reach this point. And so this is the numbers that we're getting. But overall, we do have to look at income from operations as a more important point because it does show how the core business is doing. I do want to touch on a couple of things that were mentioned during the earnings call that I did not cover in yesterday's videos. By the way, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're so close to reach 28,000 subscribers. We're trying to reach 30 by the end of the year. So if you haven't subscribed yet, like I think over 70% of you, first of all, thank you for watching the videos because the views have been much better than during the bear market of 2022. So thank you for all the support. But please maybe hit that subscribe button. It's free, so why not? So, healthcare and transportation, they say here that grew 93 and 129% year over year, respectively. I mean, that's pretty impressive. And with regards to the international commercial business, that grew just 4% year over year to $129 million and remained flat sequentially. Relative to the United States, they continue to see a more muted growth in European commercial enterprises. I'm not surprised there. Although there remain targeted opportunities of growth internationally, such as Japan, Korea, Canada, and the Middle East. They said that they are investing in pockets of momentum within certain commercial businesses, and at the same time, they are seeing AIP lead to expansion conversations with our largest long-standing customers in Europe, all against the challenging backdrop of today's climate. So here again, we come back to the point that AIP will reaccelerate the growth of the overall business. Then with regards to profitability, right, they did talk a couple of times about the S&P 500 inclusion, how that's very important to them, so that's why they want to stay profitable, especially if they can stay profitable for another quarter, they'll be eligible to be included in the S&P. Now, why is that important? Because, well, since the S&P, there are lots of trackers, so people will automatically have to buy the stock. If you track the S&P, you'll have to buy that stock as well. And so if Palantir is included, then usually what happens is the price goes up because, well, more people will have to buy that stock. And so when asked about profitability, why do they care about that? Alex Karp said during the earnings call, why do we care about profitability? We care about profitability because we power some of the most important enterprises in the world. They care that we are on steady footing. We care about it because it shows people that we are serious. We care about it because it positions us to be on indexes like the S&P that show that we are one of the leading industries in the world. And it makes sense, right? If you are talking the big talk and trying to walk that walk, it's a funny sentence, then of course you'll have to show it on your balance sheet. Because if you're losing money each and every quarter, nobody really knows who you are, why would big corporations, big enterprises around the world take you on and use your software? It just doesn't make any sense. And so being profitable, staying profitable, being included in the S&P is giving them more credit, let's say, when they go and sell their software. And now last thing here, this is something that really annoys me, not just with Palantir, but with a lot of companies that do change their presentation and put new information in, but remove two other crucial information that we've got. And here, again, there are some numbers that are missing. I think from the commercial side, suddenly, poof, we don't know. It disappeared, right? Weird. Then when it comes to net dollar retention, right, I'll have to zoom in for you to actually see what the number is. It's 110%. It's down quarter over quarter. It's probably down year over year as well, but it really annoys me to see that crucial numbers or get removed or suddenly get hidden in like a footnote or something like that. I mean, come on. And so we've reached the graph. Now, for those that don't know what I drew here, no, this is not a Picasso. This is not something that goes into Le Louvre. This is a bearish divergence where the stock price has a new high, but the RSI is not as high as the previous high. Lots of highs here, I know. So, unfortunately, momentum is not with the stock. And look, we were overbought, and this is on the weekly basis, by the way. And I think we might revisit $14. This is just me using my crystal ball that doesn't exist. But $14 was previously a resistance. Then here we had 2 weeks of, are we going higher, are we going lower? And then we went on to go higher. Of course, look for the 20 and the 50-day moving average as a type of support on the weekly. But to be honest, right? To be honest, current valuations do not support the growth rate that we're getting right now. And so, if it drops lower, great. We have another opportunity to buy shares of Palantir if you want to, right? If you want to. Because back when it was $6, $5, I've had in my comments on Twitter, whatnot, or X, sorry, people saying, oh, I'll buy it when it goes to 5. I'll buy it when it goes to 4. Guess what? Never went to 4. And even if it went to 4, you wouldn't buy it at 4. You'd say you'd buy it at 3. Same thing can be said here. If it falls to 14, people say, I'll buy it at 10. I'll buy it at this and that. Again, you do what's best for you, for your future portfolio gains. If you have cash on hand, if you had better opportunities out there, that's fine. Nobody's blaming you, right? Remember, the stock does not know that you own it. It's a very important lesson here. People think, oh, I'm connected, emotionally connected to a stock. The stock doesn't care whether you buy or sell or whatever. You have to know what's best for you. If you think you're comfortable buying Palantir at $17, you buy Palantir at $17. If you think it's going to go lower and you want to buy it at $12, put some buy orders there. You can sleep well at night. If it gets hit, great, you got it at 12. If it doesn't, then your position continues to go up for the long term. Who cares? As long as the business is executing, as long as management is executing correctly, you should be fine. The moment the business is not doing well, that's when you can start selling some shares. And by the way, taking profits, no shame in that. So that will be it for this video. I think it's going to be a bit longer than what I expected, but hey, I hope this was valuable. Of course, do share your thoughts down in the comments below. I will be covering Disney's earnings report on Wednesday, so stay tuned for that. Again, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.